We are in conversation with both Mr. Tulsian and Amrish Baliga. Of course, Ashwini and Mitesh also with us. Let me talk about the stock that's on the move, the one that we were just referring to before we went into the break, Amrish. Now, Jet Airways around this level of 240, 241. I don't know right now, excitement. I mean, is there anything in it, even for the trader? I'm not talking about the investor now.
No, for a trader, there could be. I mean, I really wouldn't look from a trading point of view, but for an investor, surely not. Because clearly, I mean, whoever was interested in buying or selling, I mean, I'm talking about the larger investors, I mean, buying or selling Jet, the figure being talked is 150. And this will happen only if the resolution which the bankers are giving are suitable and acceptable. And I think only on 1st of April we'll know whether the airline is still working or not, because 1st of April also is the deadline given by the pilots, that if they don't get the salary, they are stopping flying. So it's a question of whether Jet survives at all or not. And this huge a premium to be given for answering that question, I think it's too expensive, because especially when the larger of the investors have clearly said 150 is the price.
Okay, well, Jet Airways now up 6%. It's a curious case. We've been saying the price indicating something perhaps here. It's been a wealth destroyer, of course, over the last 1 year. Talking of airlines, today there's some serious profit taking happening in Indigo. Now, that has been the trade for the last 1 month. That money's been moving from Jet to Indigo. Today looks like just perhaps a bit of a reversal of that trade. In fact, the stock down 3% right now. But keep in mind, it's had a very strong rally. It's up about some 70-80% from last to last quarter's results. And, on the day it had made that bottom, and after that, there's been just this rally. And of course, this rally from March is also big. But before that, the December quarter, when it was in 3-digit, somewhere around January, that rally started at around 940, 950. And perhaps around maybe 960 would be the price. And from that point, it's been a one-way rally, and that seems to be, seeing some kind of profit taking, at least for the day. But Mr. Tulsian, what explains this massive move in REC today? In fact, PFC as well, though PFC has cooled off quite a bit. REC is still up 7%, and there's a 59% open interest build-up in the stock.
See, Anu, it's difficult to take that call, but generally, because PFC, why the PFC is bearish, that people probably feel that buying the stake of REC will see the squeeze in their profitability, which may not be again the correct analysis, because the consolidated numbers, of both the companies of put together in PFC will see the increase in their EPS as well. And in fact, this is a good acquisition, but difficult to give the data points on the increase in the open interest and this kind of rise in REC and not in PFC.
Okay, it's been a big run on these stocks for whatever it's worth. Both PFC and REC have done extremely well for the day. The screen is not really changing. You've still got that 1% slide on the Sensex and on the Nifty. Not too much moving on the upside today. In terms of some big losses, just to talk about today's mid-cap action, large mid-cap action, Edelweiss is down about 6%. Vodafone, we've discussed some of the names like Dish TV already. Bombay Dyeing, Jain Irrigation. So these are your names where there are losses pretty much throughout the day that we have seen. Amrish, any thoughts on something like Dish TV?
Dish TV, again, I mean, if it comes down slightly more from these levels, I mean, we saw that move happening from about 1920 levels to closer to about 40. From there, it's corrected. And again, there is a talk that possibly Bharti could be interested, and in case that comes true, that could be one large trigger. At the same time, if you check with the subscribers, especially post-February 1st, I believe most of the bills have actually gone up. And I think that should be positive for companies like Dish. So from that point of view, I would say that, since the ARPUs should in fact, move up for companies like these. So in case we see levels of closer to about 28, 30, I think it's time to buy Dish again.
Okay, let's get back to the stock of the moment is actually Jet. Again, Mr. Sen, I know we've discussed this, but the price seems to be indicating that, that there's clearly, the market, there's one part of market which believes that there's some kind of value. Though if you look at the futures data, both March futures and April futures are trading at a significant discount. So, and it's in ban period as well. Your thoughts on, for ultra high risk taker, is this something that, you would advise, or just completely stay away?
See, Anuj, as you have said that the stock is in the F&O ban, so the trading window is all closed for the traders. So let's not talk of the trading. It doesn't make any difference. And there is paucity of the floating stock, which is keeping the cash rates very high. Now, coming on the prospects, because I as a fund manager always look for opportunity in adversity, and if you can find out those opportunities in adversity, you can make huge money. Case in points have been Yes Bank, where we have advised about a month back at 185, 190, and today the share is at 240, 245. Now coming back quickly on Jet Airways, it is a foregone conclusion which I have been seeing that when the two existing promoters, I am calling Etihad also as promoter, though they are in the non-promoter category, if they have been unstitched, obviously some new promoter will get stitched, which could be, in fact, I have been saying this, that two people are seen to be in the fray, and both are seen to be quite strong. One is Tata's, and there is no point in speculating on the other one, which I have said on the channel many times in this last 3-4 days. So, no, and bankers, lenders are not here to expose their capital and take the risk of trading into the companies when they will be taking their stake rising to about 80-90% along with IIFF, along with India Investment Infrastructure Fund. Obviously, the deal must have happened with the prospective buyer also, and if that happens, there will be huge PE expansion. Now, for hypothetical reason, take that Tata is coming in and they will acquire the 90% stake. Obviously, some haircut will be made by the banks. They will probably get this entire company maybe at about 7,000-8,000 crore on the debt basis. And even if I include the creditors and all that, about 12,000-13,000 crore, which will be a very precious asset. And they can get a stake of about maybe as high as 90% in the company. And they will be free to then merge Vistara or AirAsia or bring in the foreign airlines as a partner to the extent of 49%, where huge PE expansion and re-rating of the stock will happen. So yes, to investors, we have been advising this. In fact, like the last 2-3 days on the channel also, we have said buy this as a high risk, high return stocks at 220, and even at the current level of 240, we maintain the same view to be for a price target of 285 to be seen maybe in the next about couple of weeks or so.
Okay, all right, Mr. Tulsian, thank you very much for giving us your view on Jet, of course, all the other stocks and themes that we've we appreciate your time. We'll catch you with the markets again tomorrow, sir. On that note, it is time to move on and bring in our Alpha manager for the day. Nilesh Shetty, Associate Fund Manager, Equity at Quantum AMC, now joins in. Nilesh, good to have you on Closing Bell. It's been an interesting rally for the market back to 11,500 levels, and now it seems like vertigo is setting in. But in any case, for some of the funds that you look at with a lot of large cap exposure, what is your sense? Is this market ripe to take out higher levels? Do you see the rally building from here on?
Yeah, so the fund itself was sitting on a lot of cash last year, and we did buy aggressively once the ILNFS event happened and markets started correcting rapidly. In general, the narrow index doesn't show it, but the broader market has seen a significant correction. And our cash levels sort of at the end of Feb was down to 5%. So at least our sense was it was a good time to start buying into the market, and if you're looking at a 3 to 5 year horizon, then the upside levels are fairly attractive. So again, we continue to remain positive irrespective of the near-term events that are lined up for India. They might have some sentiment impact, but broadly our sense is valuations are a lot more comfortable for you to build a long-term portfolio.
Okay, Nilesh, good afternoon. Which part of the market you reckon the valuations are still favorable? Because we've had a decent rally if you look at the last 1 month, and a lot of stocks have bounced back some 20-25%.
Yeah, so given that the steepest correction happened in the NBFC space, and essentially we never had an exposure there given where valuations was before the ILNFS event, we went aggressively and started buying into NBFCs and companies where we believe balance sheets were not at significant risk and the promoters would be able to get financing. So we've added into the NBFC space. We also found opportunities in cement where some of the leading names started trading at replacement to discount to replacement. So we've added into cement names. Otherwise, we generally allocated more to auto companies and some consumer discretionary names where valuations sort of came off.
Okay. It's interesting. So you're obviously going down the road less traveled, so to speak. You're looking at beating down NBFCs. You mentioned auto. So let me ask for some more data points here. On auto, what are you comfortable buying now? Are you still looking to add positions? Is it across the board, CV and PV and two-wheelers, or do you have a preferred sector here?
Yeah, so given that sort of rural India remains depressed, a large allocation remains to two-wheelers, where numbers have not been that great. But again, our sense is valuations are at a lower end of their historical band, and you would rather buy into these companies where valuations are in your favor and hope for whenever the cycle turns, they would get back to their long-term median valuations. So we do have a large weight in two-wheelers. We've also added a new company, which is a large tractor player. Again, because valuations corrected and we got an opportunity to buy into these companies at where we think margin of safety is high.
Okay. And just to complete that point on NBFCs, again, what sort of FCs are you comfortable holding now? Because a lot of them are still struggling to get money at the right cost. Cost of funds has gone up pretty much across the board for this part of the market.
Yeah, so at least so the historical spreads, at least the spreads that they made over the last 3 years were sort of higher than what they've made historically. So one is you should not be valuing NBFCs on those spreads. Their traditional spreads have been a lot lower. And our sense was going forward also spreads would be a lot lower and in line with what they've done previous to the last 3-4 year bull run that they had. Now within that, at least where our sense was the promoter will not have difficulty in getting access to financing, either because it's owned by a player where people do not doubt that a balance sheet will be at risk, or companies who have seen multiple cycles like this and who survived those cycles. So, I mean, companies where we've been very comfortable on the promoter quality and the book itself, we've added that to the portfolio.
Okay, Jet is really flying, by the way, now. That stock is up about 8.5%. So, just keep one eye on that, 8.69%. To be precise. Now, Nilesh, I see that you have both these large two-wheeler names in your portfolio, Bajaj Auto and Hero Motocorp. Now, Bajaj, of course, has seen a decent rally from the lows, but Hero is making a move back towards its 52-week lows. And in fact, the entire auto pack. Your thoughts on whether this is an accumulation opportunity or is there something seriously going wrong with the Indian auto space, especially the two-wheelers?
Yeah, so the data points after October have been very surprising. The growth numbers have actually surprised even the industry itself, including us. But again, our sense is it's more cyclical. There's nothing structurally wrong with the story. Especially the penetration levels compared to sort of our Southeast Asian peers remain fairly low compared to them. And our sense is, of course, given where volume numbers are, you will not have sort of strong double-digit growth in the space, but sort of high single-digit growth combined with sort of pricing increase, you should expect sort of 10 to 12% revenue growth in this space. But again, for us, the comfort levels are at what valuations are they trading. So our sense was, given that kind of growth, they were at attractive levels. And the kind of cash that these companies throw, sort of 1 year payback on the gross block, at least for us, they sort of it was very easy to add them to the portfolio.
Okay, that's the big news coming in. This is from our colleagues at Source-Based at the moment. Naresh Goyal and Anita Goyal will be stepping down from the Jet Airways board. Now, perhaps this explains the excitement on the stock, because if this were to happen, then perhaps the chances, and this is again still source-based, then the chances of Etihad coming in on the table, having some discussions, bringing in some money, they go up dramatically, because Etihad's biggest sort of bone of contention was that they wanted Naresh Goyal absolutely out and definitely not having even board representation. So this perhaps kind of, throws in a ray of hope, I guess, for this beleaguered carrier, Anuj.
Yeah, but this is now should be an open secret now. Sort of, if, the only thing which is now left is the officials
announcement,
exchange intimation. Look, I mean, there's absolutely no doubt that there has to be some value in Jet, and the price for last few days was indicating. Otherwise, I mean, the price should have been sub 150 right now.
Yeah.
Right. It's it was not happening. So obviously there are some people who are still buying Jet, and so look, there are all kind of market participants. So to be, if you're a retail investor, just a point here. If you're buying Jet here, you know that you're taking a risk, and you're taking a very high risk. Because while I completely take the point that with a new promoter and everything, perhaps things change, but it's not going to be for the faint-hearted. So if you're one of those, perhaps you stay out. But if you want to take some risk, why not? But 10% higher on the stock right now.
Oh, absolutely. Let's see. I mean, the question is how much funding is going to be coming in. Remember, the total debt we're speaking of is roughly to the tune of about 8,000 crores, and that we need obviously immediate working capital to come in. Those are the issues that immediately need to be sorted out. And Amrish, there were also sort of reports that maybe the lenders will infuse 1,500 crores to begin with. These were again lots of conjecture at this point.
Let me just tell you, even if Jet survives, now let us assume Jet will survive, funds will be infused, there'll be conversion. Equity capital is going to go up 5 or 6 times. And then, what is the sort of, EPS you're talking of? And whatever EPS you'll see will be possibly post 2 or 3 years. And then what is the PE which you'll give to Jet at that point of time? Because even if you compare with Indigo, I think the performance has to go up nearly 20x from the current levels for it to really be compared with Indigo. So I think even at these levels it is expensive, but then I think basically because of, whatever news flows could come over the next 15 days, people are taking a stand. And you could possibly get that 20, 25 rupees, 50 rupees on trading, but surely, I'm not going to be taking that sort of a risk.
Yeah, the stock didn't break 200, and from that point, it's over the last 3 or 4 days, it's gone up to 251. Now, there are 2 ways of looking at things. One is that from 200 to 250 is still a decent rally, and it should not be. No one should believe that this is something which some people didn't know, right? And they were obviously the cash market to futures positions is quite interesting. There's been heavy buying in the cash market over the last few days. So at some point there could be some profit taking as well. The other way of looking at things is that if its enterprise value is so much lower compared to, say, an Indigo. But Indigo runs a completely different, completely efficient airline operation, Surabhi. And I think over the last 1.5 years, and frankly, even at one point, even I thought, just looking at the plain comparison between Interglobe and Jet Airways, that if they get their house in order, things could look up. But I think over the last 2 years, you should have got the message that perhaps there's something seriously wrong with the financials. Otherwise, the stock would not have collapsed the way it did. But for whatever it's worth, right now it's stock of the moment, up 10.5%.
For someone who's a movie buff, suddenly it takes me back to the epic movie of all times, obviously Wall Street and Blue Star, and greed is good, as Mr. Gecko said. Let's see who saves Jet Airways and what really happens for Indian flyers. Of course, it'll be very, very good because the number of planes coming off the skies and prices shooting up, it's definitely not been a win-win for consumers and flyers. Anyhow, let's get back to our conversation with Nilesh Shetty. Nilesh, since we're discussing this, I don't know, any interest whatsoever in aviation stocks? There's too much moving, too many pieces to the puzzle here in Indian skies.
No, unfortunately, the 2 big economy players are in a price war right now, and that is sort of having cascading effects on the other players in the market. And if your most efficient player is making losses, I don't know if others who are higher up the cost structure, how will they make money? So unfortunately, adding supply seems to be very easy in the entire space. So you get 100% financing and you can add planes at will. So you have short periods of profitability, again with long periods of losses in the sector. So again, for us, valuations have not made sense, and there are periods where when the good guys started getting traded at bankruptcy valuations, you might look at that space, assuming that they survive. But otherwise, we've not had exposure to this space for a long time.
All right, Nilesh, thanks a lot for joining us today. It was good talking to you.